Hey, how you doing, guys? It's Committee here from Phoenix. Just thought I'd do a quick video on money management, risk management, and how to look after our trades. Now, as traders, the one thing which we control is how much we lose, and that is probably one of the most important lessons which you will need to learn. The one thing you control 100% is how much money you are going to lose, and that is it. So once you're in control of that, we at least know what risk is on the table to take a potential trade. Now, I'm just looking at a few setups which we put out last week. So we had an aggressive entry here. This is on Aussie New Zealand. What others did we have? New Zealand pound. So yeah, these are looking like they're all in profit at the moment. We're just waiting for this one to trigger. And that is it. So, excuse me. Let me talk about risk. When we post a trade out, or when you see a trade posted like this, where you have a stop or void entry, first thing that means is if the market closes beneath this zone before an entry is triggered, the entry is void. We do not look at it because the market structure has collapsed. And we normally would put that on all the trades we post for setups. So assuming we've entered this trade here, so we're going to go through a full risk management cycle, and this is how you can sleep at night. So we're going to look at the New Zealand dollar Japanese yen, and so let me pop open a platform, and we'll look for NZDJPY. Need to probably select show all. NZDJPY. There we go. So we've got New Zealand dollar and Japanese yen. I'll open this chart and I'll stick it on a daily time frame. And let's just shift that a little bit. So this is the setup we posted. We're looking for an entry in and around, excuse me, the screen's just moving about a little bit. So we're looking for an entry in and around this zone here. Let me just sort the screen out a second. Perfect. And I'll just expand it so you can see the tools that I'm using. So we can see the entry, which was this line here, and we had a stop loss placed above here. Take profit 1 would have been down here somewhere, and take profit 2 would be a little bit lower. Now, first thing you need to do is you need to identify the distance in pips from one to another. And so the stop loss on this is 128 pips, which is fine. The number of pips you've got as a stop doesn't really matter because we work in terms of percentages. So what we're looking for now is to calculate what our account balance is and how much risk we're prepared to take. So go online and you can go to any Forex calculator. We'll go to one on my FX book. So FX book, calculator position size. So my FX book, Forex calculator position size. We go to the position size calculator, and what we should have here is the currency. I'll stick this in pounds because this is where we are. Account size, how much money do you have in your account? We'll call it 10 grand. Risk ratio, it should not be more than 1%. Stop loss in pips, I can't remember, it was 127, around that. And you select the pair you're trading, which was New Zealand yen. So off the back of that, we know the money we're risking is £100 because that's 1% of our account. We know the units and we know the lot size. So this is important. So when you're placing your trades, that will be the lot size you need to enter when you place your new order. So we have our new order here. The volume will be that to risk 1% of your account. Now, once we know the maximum we're going to lose is 1%, you can sleep at night. I know I've got 10 grand and the maximum I'm going to lose on this trade is £100, but the potential in terms of winning is going to be £400 or £500, and that's how you develop a winning trading strategy. Every trader is going to lose trades. Every trader is going to win trades. The ones which make it in this world are the ones that manage their risk. So this is very important, guys. Make sure you manage your risk 1% per trade, and the profits are 2% or more. And as long as you follow that very simple but difficult emotionally, understand, to deal with, you will end up making profits. At a 2-to-1 win-loss ratio, you only need to be right 3.5 times out of 10 to make profits. And that, well, you've seen our trade calls in the past 2 months. We're probably about 8 out of 10 in our calls. So you'll need to be right 3.5 out of 10 to make profits. Make sure you've got a risk of 2-to-1. And remember, as pro traders, we talk about risks as opposed to profits. So manage your risks. That's the one thing we can control. So I hope you all find value from this video. I will do another video on risk management and trade management in the next week or so. So definitely look out for that. Until next time, guys, happy trading, and we'll speak soon.